This is something I do, which I really, really, really wish all of you to do this. Please start doing this. This is a lifesaver. Okay. It's so simple to do as well. Okay. I wish the US government did this. We wouldn't have the $36 trillion in national debt. Okay. I mean, so in budgeting, there's two kinds of budgeting that I wish the US government does. And if, we have a Doge or, Department of Government Efficiency person, I'm not going to say names because some of you may not like him. I wish he takes on something called ZBB. ZBB is zero-based budgeting, meaning if you have a 1-inch pipe that's coming in revenue, you don't have a 3-inch pipe that's going out. That's what we have now. We have a 1-inch pipe coming in, revenues coming in to the treasury, and we have a 3-inch pipe that's going out. I'm like, no, we can't do that. So on zero-based budgeting, which a lot of actually decent companies deploy, is whatever is coming in that's all we can spend. We're not going to go borrow more and spend more and do this. Yes, do they, slow growth a little bit by not borrowing? Of course. But then, look, I'm not telling people not to borrow money. If you're going to borrow it, do it intelligently, not like we're doing it. Borrow from the unborn future generations of this country. So the way I do it in my household is ZBB is quite difficult, but then if you do it this way or ZBB, either way, you will have a balanced budget in your household. Okay. So there's a 50-30-20 budget rule. Pretty simple rule, man. I live by it. Not all my life, I've made my mistakes. Okay. But then once you get married 20 years ago, I go, I need to have a budget. I can't just make money and blow it all on new cars and, dinners and things like that. So now I got to go. I said, okay, I researched a little bit. I go, okay, so what is the 50-30-20 rule in budgeting? 50-30-20 rule involves splitting your after-tax income in 3 categories. Simple. 50% goes to needs. What are the needs? Now, you can adjust this any way you like, but you should stick to pretty close to these numbers. Needs, your rent, your mortgage, your car payments, your credit card payments. Please, if you do borrow in plastic, please float their money for 30 days and pay your balance at the end of the month. Do not carry balances that's going to hit you with 30%. So 50-30-20 rule, 50% goes to needs. Those are the needs. Those are the basics, right? 30% goes to wants. Actually, that's in my book, that in my household, that's lower. That's 20 to 25. I will not go to 30. Now, wants are what? Oh, I want a new car. Those are big ticket items. I want a vacation. I want to do this. I want that. We all want it. Okay. And also, that 30% is the one that you can really play around a lot, which means you can take some of that 30%. The wants part, want is easy. And getting the want is also easy. You just put the plastic out and get it. What I try to do is I try to lower the wants, add it to the needs. Because of what? Because of inflation, right? Everything I'm paying for has gone up. My insurance has gone up. My food has gone up. My rent has gone up. So you can balance it out. But the most important part of this 50-30-20 is the 20 part. As savings. Okay, well, since the great financial crisis, your savings earned you nothing, zero, right? Well, what happened though? Fed raised the rates to what? 0 to 5%. Short-term T-bills, CDs, are still 4.5%, although the Fed's lowering the rates. So on a nominal basis, you're still breaking even or losing a little bit. Nominal basis meaning if you deduct inflation from the return you're getting at the bank or your money market fund, short-term money market fund at your broker, or bank, although the government gaslights and tells you guys inflation is running at 2%, it's BS. It's not. Inflation is 5 to 7% per year. That's the debasing of the currency. Print, and pump it into the economy. Doesn't work like that. So they gaslight and they go 2% inflation is great. I'm like, no, we're not at 2%. Inflation has never been 2%. But Even if inflation is 5% and you're getting 5%, you're at least breaking even. You're protecting yourself, right? So the 20%, I don't like bonds. I don't like because I can get much higher returns than the benchmark, such as the S&P 500 or whatever with my trading, supplement my income that way. So what do? I take that 20% every year, right? Added, I take at least 10% of it and put it in my long-term portfolio. What do I do with that? I buy stocks, long-term. Okay, you got to have two different accounts. Don't mess with that. It's like that infomercial that we used to say, set it and forget it. Does that mean you don't get in and out? I mean, I've been talking about, since I started the channel, I've been talking about Carvana, I've been talking about Kava, I've been talking about NVIDIA. All these stocks that are doing nothing but wonderful, wonderful wealth growth for you guys. Dollar cost average. I take that 20% and at least 5 to 7% of it goes into my trading account. And then the rest goes into my long-term investing account. So please follow this 50, 30, 20. If you can't follow this, you will not have anything to show for yourself when you're older. Just do it. Please do it. If it's 60 of your after-tax income is going to your necessities, needs, I understand, okay? Because none of our earnings or none of our income is catching up with inflation. I mean, we know that, right? But I'm urging to have some resemblance of a budget. You don't have to do the 50, 30, 20, but I urge you to do it this way. And people go like, well, I can't search. Okay. What are in the wants? That 30% is too high, right? Okay, what are the wants? Do you want Starbucks every day? Do you want Big Mac every day? What do you want? You're not going to need a car every day. You're not going to need a TV every day. You're not going to need a cell phone every day. These are the major ones. A lot of the wants are frivolous expenditures. You go to Starbucks, pay $7 for a latte. Make your own latte at home for 50 cents. Okay? That 30 will collapse to 15. A lot of people want a lot of things. I want a lot of things. I want a jet. No, it's not going to happen. It doesn't work. My point is, please control the wants. If you can, I would love for people to do 50, maximum of 60. That middle 30 goes down to 20 or lower. No, doesn't mean be cheap. Doesn't mean don't go out to eat. Okay, go out to eat once a week, once a month, maybe once every 2 weeks, as opposed to eat out every day or order food on DoorDash or Uber Eats or get ripped off, right? That 30% could be played with. So if you can lower that 30% and then for a month, let's say, and this is not like forever, you should do this every month because some of your incomes will fluctuate month to month. If you can get to 60, 20, 20, great. But do not, one thing is for sure, do not lower that last number, which is your savings and investments, to lower than 20%. Don't ever do that. Don't sacrifice your compounding ability, your return ability by increasing the 30 in the middle. Don't do that. If anything, lower the 30 as low as possible. And we all know we can. Some months you may have to add it to your needs because your rent has gone up probably over your car insurance has gone up. I understand, but don't mess with the 20, the last number, and please do this. Please have a budget. Without a budget, you're going to be just like China. You're going to be just like the U.S. government. Please control yourselves.